Hello and welcome to Insurance in Canada. I'm your host, Rick Pereira. Thank you so much for joining me. On today's episode, we're looking at three articles. The first article discusses how, even with the ongoing trade war between Canada and the US, there's still opportunities in commercial insurance when it comes to construction coverages. The second article looks at the damages so far, the total damages so far from the Manitoba and Saskatchewan wildfires. And our last article looks at a story coming out of Winnipeg, a tow truck owner being accused of auto theft when it was being done by their employees. What does it mean for him as an employer? We will take a look. So without further ado, let's take a look at insurance in the news. So our first article today looks at possible opportunities for those insurance brokers who specialize in the commercial line side, especially those with specialize in covering construction companies, even with the ongoing tariff war. What opportunities there are for commercial insurance brokers who do cover the trades as well as construction companies in general. So let's take a look at the article. How Canada's tariff response spells growth for construction coverages. Although tariffs can escalate insurers' claims costs, the federal government response to tariffs has opened opportunities for specialty commercial brokers, particularly those in construction lines, sources tell Canadian Underwriter magazine. And yeah, the claim about escalating insurance claims costs, we saw that in previous episodes when we're talking about aviation insurance and how claims costs have been going up in aviation insurance for a number of reasons. But one of the biggest reasons would be trying to acquire aircraft parts. Those aren't being made in Canada. They have to be imported, especially for the United States. So there's going to be other areas in insurance where claims cost is going to be affected by tariffs as well. Back to the article. The Liberal government campaigned on a promise to double the pace of construction to almost 500,000 new homes a year. It also promised to inject $5 billion into a new trade diversification corridor fund to build the infrastructure that will help diversify our trade partners, create good jobs, and drive economic growth. This fund will accelerate nation-building projects at port, railroads, inland terminals, airports, and highways. That's an opportunity for the property and casualty industry, sources tell Canadian Underwriter. Investing in healthcare, education, construction, and real estate, those are very large parts of our economy and parts of the insurance industry as a whole that will create opportunities for underwriters, says Elizabeth Diot, Senior Vice President of Professional and Financial Solutions at Tokyo Marine. How that develops into an opportunity in insurance is yet to be seen, but government spending and government infrastructure does tend to boost opportunities in our space as well. Mike Brown, head of construction at Zurich in Canada, or it should be Zurich, Canada, see spin-off opportunities from the planned increase in construction project. It's one of those simple equations, says Brown. If you want to build 100,000 new houses, you've got your work cut. You've got to work. You've got you work. I think there's a bit of a typo in this article here. You've got to work out how many kids you have because you will need schools. We're going to need a cinema. We're going to need a big box stores. We're going to need a sewage plant. And then you've got to connect the arteries to everything else you need, the roads, the gas, the utilities. And this is all happening at a time when construction specialty rates in Canada are really, really soft, says Matthew Burnett, president of the Insurance Brokers Association of Canada and owner of MB2B Insurance. For the big construction, the big infrastructure project, and high-rise buildings, the rates are really going down. And we've talked about the ongoing soft market in the commercial insurance side, and that is true. Yes, we are on a soft market on the commercial line side, but that's something that can always flip really quickly. Markets are slow to go from hard to soft, but go from soft to hard. It tends to happen much rapider than the other way around. So also, I've read reports saying that housing starts in the GTA, Greater Toronto area, are down from last year. So I'm not sure if that's an indication for the rest of Canada, but that's what's going on here in the GTA. So any investments, any injection of funds by the government to try and boost those housing starts does take time to work its way through. And of course, government's never efficient when it comes to any sort of project. So how much of that actual money gets down to the actual home builders to build new homes? Who, that's always the big question. So yes, it's a good time now when it comes to the insurance market for construction as well as other aspects of commercial insurance. But like I said, let's see how long that can last. Back to the article, we see 30%, 40%, or 50% rate reductions on some renewals, so it's a major, major down. Still, soft is a relative term. Commercial carriers are still increasing rates according to Applied Canada's 2025 second quarter commercial rate index, but increases in the construction space have slowed to half of what they were 2 years ago. Applied reports average premium increases in construction were 7.24% in 2023 Q2, but they fell to 3.56% during the same quarter this year. Construction project insurance is beginning to experience a stabilization after a long, rocky, hard market cycle, says a report by WTW. It is safe to say that this stabilization is largely due to the new norm of witnessing massive construction projects readily introduced into the insurance marketplace. It also depends on the type of construction. Soft markets aren't materializing as much in the for sale residential and coastal sectors or for wood frame building, most likely due to wildfire and flooding damage in Canada reaching record levels in 2024. Soft market as materializing. Well, the for sale residential wood frame buildings, you see so much when it comes to construction starts for condominium buildings. However, in my opinion, people still dream of owning that, detached home, white picket fence. Sure, some people love the condo lifestyle, but, never really downplay the demand for when it comes to single family homes. So maybe the soft market hasn't reached that particular area of the construction coverage, but condo construction is always the most volatile when it comes to new home construction. So I'm not sure if you will ever see that soft market spread into those sectors that they were talking about. Coastal sectors I could understand, but still, for sale residential, I can still, in my opinion, that's still the go-to for most people. So that's, for my opinion, that's where the demand would, for me, when it comes to residential. But let me know what you think, if you think I'm off my rocker, or if you agree with me on that particular point. But when we get into the four-wall stone, concrete, steel structures, life gets a bit simpler, says Brown. The four-wall construction, large-scale construction, there is huge market appetite for that. Prices are dropping, deductibles are dropping, cover is widening. It's a softening market. We haven't got to the pits of the mid-teens when it was not just unsustainable, but it's very challenging to write the business. Tariff-induced economic uncertainty could slow the construction pace, says Brown. We are seeing a slowdown of investment into the construction market. The government is doing everything they can to drive it. We're seeing the projects come, but they're not coming at the rate we were expecting. And I think that the international finance community, they're playing a little bit of wait and see. Terror-induced economic uncertainty could slow the construction pace. I'm not sure about that myself. I mean, it's all the demand for housing that's internal. Sure, the price of some construction materials that have to be imported from the States would increase, but a lot of what we use to build, we produce here in Canada. So if you're going to see a slowdown in construction pace, that it's going to be interest rates, housing prices. That's going to be a way bigger factor than current tariff situation. That's just my opinion. Back to Darko, I think the financial markets are actually driving the speed of things coming in. For example, the mega projects, the carbon capture, the lithium battery plants. We're seeing a pushback against electric vehicles because of the tariff-related tie-ups. I'm not sure about the tariff being the driving factor of the pushbacks against electric vehicles, but at least in the consumer market. Maybe in the production of electric vehicles, it's a different story. But when it comes to demand, I don't think tariff is the biggest deciding factor when it comes to electric vehicles. It doesn't mean they're not going to get built, but investors are just saying, let's slow down on our construction. But the slower pace of building may, in fact, be pouring gasoline on the fire of a softening construction insurance market, says Mark Major, Marsh's managing director and global placement leader for Canada. If tariffs are involved, we're going to see a slowdown in construction. He says government-sponsored major infrastructure projects will continue to move forward, but home developments, multi-residential complexes will slow. How that impacts the underwriting community is that they might even be more competitive because for every construction project comes their way, they're going to try and get a piece of it. So there's always going to be opportunities when it comes to commercial insurance. You just have to sort of get ahead of it and see which way markets are going for different types of commodities, different types of product. Sure, electric vehicles, when they were popular in their heyday in the early 2020s, late 2019s, sure, that was the time to really push when it comes to insurance, not only for the vehicles themselves, but for the production of those vehicles. However, now we're seeing the shift when it comes to those types of products. So whether that's really worth pursuing is a different question. There are some insurance companies out there that offer discounts for having a electric vehicle, but many of those insurance companies have just done away with those discounts just because the claim situation of those vehicles doesn't justify incentivizing people to insure yourself with those types of vehicles. But same thing when it comes to other sides of commercial insurance. Manufacturing might be slowing down. Maybe when the trade war ends, investment returns back to Canada. That can change. But yeah, like I said, it's not just enough to keep up with going in the insurance industry, but in the industry that if you do specialize, that, what's going on in that particular industry so you can try and keep ahead and be competitive with your clients as well as trying to attract new business. Our next article looks at the damages from the wildfires in Manitoba and Saskatchewan. CatIQ releases damages from Manitoba and Saskatchewan wildfires. Insured losses from the Flin Flon, Manitoba, and La Ronge, Saskatchewan wildfires are estimated to have caused nearly $300 million in damages, according to Catastrophe Indices and Quantification Inc., also known as CatIQ. The Flin Flon wildfire complex was created when a number of out-of-control fires converging, burning from May to late June. The fire spanned from north of Snow Lake, Manitoba, to Pelican Narrows in Saskatchewan. Nearly 40,000 people had to evacuate from the out-of-control blazes. The insured losses from that event total $249 million, CatIQ says. Denair Beach in Saskatchewan experienced some of the most significant damage from the Flin Flon fire. Officials reported hundreds of homes, structures, and vehicles destroyed. And in early June, several Saskatchewan communities, including La Ronge, Hall Lake, and Ronge, experienced an out-of-control wildfire that led to evacuations. Insured damages tallied more than $50 million. Insurance Bureau of Canada notes that wildfires continue to burn out of control across Manitoba and Saskatchewan. As such, the industry may expect more damages, if not catastrophes, which are defined as events exceeding $30 million in insured losses, according to CatIQ. The IBC says prolonged dry and warm conditions across much of Manitoba and Saskatchewan this spring and summer have led to volatile conditions. The association cites that to date, 780 wildfires have burnt close to 5 million hectares of land in the province this year. There are currently 122 active wildfires in Manitoba and more than 2 million hectares burnt. In Saskatchewan, there are currently 36 wildfires burning in the province. There have been 485 fires so far this season, surpassing the 5-year average of 425, but trailing the 576 blazes from this time last year. I guess we can take some comfort in that, knowing that this year so far is not as bad as it was last year. The totals, of course, not as big as we've seen in wildfires in other provinces. The Fort McMurray wildfire comes to mind. Jasper wildfire, definitely those two were. Uh, in terms of monetary damage, yeah, they were much greater than what we're seeing here. However, the devastation when it comes to what we've seen so far in southern Saskatchewan and Manitoba is probably on par when it comes to the area that those fires have destroyed as compared to what we've seen in other provinces. Uh, Hopefully now that the weather is cooling off, the wetter weather is moving in, it can help the firefighters out in Manitoba and Saskatchewan and across Canada as well try and get these wildfires under control. So fingers crossed for firefighters in all provinces that they get some relief to help them contain a lot of these fires already causing so much damage across Canada, not just in the prairies, Atlantic Canada as well, BC. Our last article, car recycling company owner in Winnipeg denies role in vehicle thefts by tow truck, blames employees. Okay. A Winnipeg business owner accused in a lawsuit of stealing vehicles with tow trucks and selling them for scrap metal is calling for the case to be dismissed, alleging that his employee was behind the illegal activity without his knowledge. Corey Fincarrick, 48, and his company, Winnipeg Auto Recycling, were listed in a statement of claim filed in July as the target of a Winnipeg police investigation in connection to multiple vehicle thefts. The claim filed by the director of the province's criminal property forfeiture alleges Fincarrick and his unnamed employees were involved in the thefts of at least 9 vehicles between July 2nd and July 14th in Winnipeg. The documents said the vehicles were towed to the property in East St. Paul when Fincarrick or his employees would break windows, dent body panels, and paint WAR, the acronym for the company's name, on the vehicles to make them look like scrap vehicles. Winnipeg Auto Recycling, yep. The stolen vehicles were then sold to a scrap recycling company in exchange for money, which was used to pay off loans for tow trucks, a trailer, Fincarrick's mortgage, that's rather suspicious, and deposit into bank accounts according to the court filing. However, Fincarrick claims that he and his company did not knowingly receive a material gain as a result of the unlawful activity. Having your mortgage paid is not material gain, even if the bank accounts weren't in his name. I mean, pay off loans for tow trucks, a trailer. How? Okay, yeah, that's what you want to. That's what you're saying. According to a statement of defense filed on Monday, Fincarrick alleges his employee was acting outside the scope of his authority independently and without the knowledge of the defendants when he stole, damaged, and sold vehicles using company property, according to the court filing. Fincarrick admitted receiving money from his employee, according to the suit, but claims he did not know it was obtained from unlawful activity, and I'm guessing he didn't ask where the money came from. The statement of defense says that any reduction of debt obligations on Fincarrick's mortgage, tow trucks, and trailers was with the funds that was legitimately obtained through his employment. He also did not knowingly deposit any funds from illegal activity into his personal or business bank accounts, according to the filing. The director of the province's criminal property forfeiture previously sought a court order to seize Fincarrick's property, along with his bank accounts as proceeds and instruments of unlawful activity. An interim order was granted in July. On July 16th, the Winnipeg Police Service arrested 2 individuals and seized 2 tow trucks believed to be connected to vehicle thefts in the Transcona area. Fincarrick was one of 2 arrested, according to documents, and was charged with 9 counts of motor vehicle thefts and 5 counts of mischief over $5,000. A person who did not want to be identified answered a phone number for Winnipeg Auto Recycling in July, saying the employee involved had been fired. He said the situation had been rectified and did not want to comment further. The province would not comment as the matters before the courts. None of the claims have been tested in court. So when you're an employer, you are responsible for the actions of your employees. You are financially liable for the actions of your employees. assuming that what they're doing is within the scope of their duties and is legal. So if what he says is true and the employees were conducting these illegal activities without his knowledge, then he wouldn't, then that would be a possible defense for him. Now, I'm not a lawyer or anything. This is just from what I've learned over the years when it comes to um, vicarious liability of employers for the actions of their employees. But wow, there's a lot of smoking guns here when it comes to the owner's actions having all this unknown money coming in so he can pay off his mortgage, his tow trucks, his trailer, and he never questioned where this money came from. So it kind of seems like willful blindness that you were willfully you should have had suspicions as to what was going on, but you took no action to investigate further because if you didn't know, then you can claim innocence when all this comes down on you. But boy, that's going to be a hard one to sell to the courts to try and convince them that you are completely innocent when you benefited so much from the activities and took no notice of what was going on in your business. So when it comes to the insurance side, if he were to be sued by the owner of the vehicles that were stolen, this is going to be a very complicated situation because obviously liability insurance does not cover illegal activities. However, if the owner of the business is truly innocent and had no idea what was going on, it is possible that the liability insurance could cover the liability of the owner. It would not cover the liability for the employees. So if the owners of the vehicles sued the employees for the theft of the vehicles, the liability insurance of the company would not cover the employees because they were engaged in illegal activities. But like I said, the insurance company is going to have a pretty solid ground to try and deny any claim that's put forth by the owner of the business for any lawsuit being brought against him by the owners of the not only the owners of the vehicles themselves, but they were selling the vehicles to recycling centers as well. So there could be lawsuits coming from them as well because they might face liability as well because they're dealing with stolen goods, even though we're talking about scrap vehicles. So yeah, it's a very complicated scenario. Not too uncommon though. I'm not going to say this never happens, but I'm not going to say this happens all the time, but you do see this every once in a while. Illegal activities being partaken by employees of a company, of an individual, and where does that liability lie when the employees are engaging in illegal activity? A, against the employer, or B, against the employer's clients. A, against the employer, well, that's Fidelity Insurance that looks after any theft of funds against the employer, but against the employer's customers, depending on what's being stolen, money, or in this case, vehicles, it gets kind of complicated as to the coverage available in that particular situation. So if you're a business owner who employs who has employees, you make sure you really are involved in the day-to-day operations of your company, or you have somebody trustworthy that's looking into the day-to-day operations of the company, but don't just wash your hands of it and just rely on others, because in the end you are the owner of that business, you are the CEO of that business. So in the end, it's going to fall squarely on your shoulders. And insurance may or may not step in to relieve you of your financial responsibility for those criminal acts. So that's it for me for today. I want to thank you for joining me. If you like what I do here, please leave a like. Don't forget to subscribe for more. Please leave a comment down in the comments section. Let me know what your opinion is on any of the stories we talked about so far. Reminder to follow Insurance in Canada on X/Twitter. As I said before in the past, these episodes will be available eventually as audio podcasts on Spotify. So don't forget to check it out there. And until next time, bye bye.